Everyone is talking about tariffs. Why? They're having huge effects on the stock market, they're having huge effects on small businesses, and very few people understand, one, what is a tariff, and then secondarily, how is it going to affect you, whether you're running a business or investing money? Well, today we're going to unpack those two items and demystify tariffs, making sure that you have a simple, clear explanation on what they are and how they affect you. If we haven't had a chance to meet, my name is Luke Turner. I am the co-founder of Moen Private Wealth. We help athletes and entrepreneurs get smarter with their money. If you haven't already, please subscribe to the channel as we dive into today's topic on tariffs. So, first off, what is a tariff? The easiest way to think about a tariff is a way for a government to produce an additional revenue stream for imports coming into the country. So, in this example, let's look at the 25% tariff that the United States has levied on Canada and Mexico. And let's look at a clear example. Let's say that we have Canada, which produces a lot of maple syrup, and that maple syrup is getting imported from Canada into the United States. How does this actually work? So we have the Canadian Syrup Company up here in Canada. They are importing those goods down into the United States. And let's say that they're being sold at a company like Walmart. And let's say that there is $1 million worth of Canadian syrup that's coming down here. Well, what ends up happening is that the US company actually pays that tariff. So let's look at our example here. We have $1 million of maple syrup that's coming in. We have a 25% tariff. So that equates to a $250,000 cost to Walmart. Now, why is this so important and why are people talking about this? Because this $250,000, this US company now has a decision to make how they want to handle this additional cost that they have, okay? The couple options that they have are, one, they can eat that cost, meaning that Walmart's company profits are going to be less, because keep in mind now they have this additional expense on their P&L. They have their income, they have their normal expenses, and they have this other line item, tariffs, which gives them their net profit. So they can either eat that cost, which will produce a lower profit margin, or they can pass that along to the customer by raising prices. Now, both of these situations cause for a lot of different implications down the food chain. If we think about those two situations, one, if we are going to eat the cost, it's going to reduce our profit, which in turn affects the stock market. So let's say Walmart, this publicly traded company, now all of a sudden they have dramatically lower profits, specifically on maple syrup. But this is going to be across the board on anything that they're importing into the country and then selling in those stores in the United States, which is going to affect their profits. It's going to affect their price per earnings. It's going to affect all these metrics that are tied to the stock market. So that's why when we look at the stock market over the course of the last week, the last month, there's a ton of uncertainty around tariffs and how they're going to affect the stock market. Just recently, we saw a 10% dip in the market in 2 days, all because of this uncertainty around how this is going to play out. Now, that's one situation. Now let's look at another situation. This other situation is, what happens if they pass this along to the consumer? Well, this also can cause big effects down the food chain. A couple of things to keep in mind. One is that we would expect inflation to rise. And secondarily, with these costs going up, we would expect consumers or people in the United States to actually spend less money. Because now when they walk into the store and they have their $100 budget, that is going to go not nearly as far. Their maple syrup costs $8 to buy instead of $5 to buy. All of a sudden, we have this huge additional cost, and the consumer actually doesn't have any more money in their pocket. Because if we rewind the clock and we think about this, the consumer walks into Walmart, they are now hit with these higher costs, but there's nothing in this situation that allows the consumer, the person in the United States actually paying for the good, to make more money. And this is all happening at the government level. So that's the biggest thing to understand about what a tariff is and how it affects you. So what should you do as somebody in the United States or outside the United States thinking about tariffs and how this actually affects you in your real life? So a couple of things to keep in mind is that, one, whenever there's uncertainty, there is always going to be volatility in the market. Obviously, we help people as it relates to investing money in the stock market. And we see this from time to time where these black swan events come up and things get put out in the market super fast, and then there's big swings in the market. A couple things to be thinking about. One, this is a great opportunity to rebalance your portfolio. All right, so now that we know what a tariff is and what are some of the effects that can be happening, how does this actually play out for you? And I want you to be thinking about your investment portfolio. 3 things that we can be thinking about in your investment portfolio to take advantage of these tariffs and this volatility that we're seeing. One is rebalancing. So as we think about our portfolio, rebalancing our portfolio back to our target asset allocation. So an asset allocation is going to be how much we have in stocks and how much we have in bonds. Okay, so let's do an example and say that you own 70% stocks and 30% bonds. Well, now that we've seen this big dip in the market, instead of 70% stocks, maybe you have 65% in stocks and 35% in bonds. Great opportunity for us to take some money that's in our war chest and move it over into our growth strategy or our stocks. And this gives you the opportunity to sell high on the bonds and the cash or our war chest, and then buy low in our growth strategy or our stocks. Okay, that's number 1. Number 2 is making sure that we're dollar cost averaging in. Most Americans are doing this. Dollar cost averaging is the act of taking money and putting it in the market on a consistent, regular basis. So when we think about dollar cost averaging, the easy example is your 401k. Every 2 weeks you're getting paid, a percentage of your paycheck is going into your 401k, and this allows you to dollar cost average into the market. And this is great for times like this where we see a big dip in the market, and then we have the opportunity to be buying in at these lower prices. It's a great opportunity for almost everybody in America who has access to those 401k. All right, the third thing that we should be looking at now is what are we doing with our excess income? So for a lot of the clients that we work with, they have excess income on a monthly, quarterly, or annual basis. And then we have this decision to make on how much we should be deploying into our investment portfolio. This is a great opportunity for us to be thinking about that excess income and saying, okay, is now a good time for us to start deploying money into the stock market? Again, this is going to be really specific to you as a person, what your goals are, what your needs are, but this is something that we're talking to all of our clients about. Is this the time that we should start peeling off some of that excess income and deploying that into our long-term investment strategy? So to wrap up today's video, we've talked about a lot. Tariffs, how they affect the US consumer, how they affect the US company, how it affects your investment portfolio, things you should be thinking about. If you enjoyed this video, please hit subscribe below. We're gonna be putting out more and more content just like this. And if you enjoyed this video, there's another video in the description below that I think you'll enjoy too. Again, my name is Luke Turner. Until next time.